So Alibaba stock today is trading at its cheapest price to sales valuation ever. Like ever since the stock has been listed on the US exchange, it's never been this cheap. So yes, it's actually that cheap. But is Alibaba stock a buy? So if you didn't know, I actually have owned Alibaba stock in the past. I've made tons of videos on Alibaba in the past. I used to be very bullish on this company in the past. However, over the years, things have changed. I don't currently own the stock anymore. I don't plan to own the stock anymore for some reasons that I'm going to outline in this video here. But being objective, looking at the numbers, looking at the fundamentals, this company is screaming a bargain right now. Now keep in mind, just like with all of my investments, I'm looking at this from a long-term horizon. If you buy into the stock today, don't expect it to go up massively next week, next month, in a couple of months. These plays could take a year, 2 years, 3 years to play out. And that's kind of the time horizon you have to have with investments. If you want to be truly successful, there's going to be periods of time where stocks are going to test your patience. They're just going to move sideways, move lower. You're going to question your thesis. You're going to question that investment. And that's typically when the weekends sell out. The institutions start coming in, they start buying heavy, and then guess what? The stock starts shooting up, and then you're like, oh, I wish I didn't sell. Don't tell me that's never happened to you. That's happened to me plenty of times for many different stocks. I've learned from that mistake. So now, when I see stocks that I love just move sideways or move lower, I just keep adding in more to that position as much as I can. And then eventually over time, if it's a good business, the stock price will go higher. And I just want to give a huge thanks to my VIP group members for their support. If you want to join the family, guys, and join our Discord, check the pinned comment in the description down below. Anyways, let's start off this video by looking at the charts, and then we'll go through some details. Some news actually that came out this week regarding Alibaba, some good news, some bad news. A lot to discuss. Let's jump into it. Okay, so here is Alibaba's chart on the weekly time frame, and let me just say this. If this was Amazon, Facebook, Google, Apple, one of the other large tech giants here in the US, and I saw charts like this, I would most likely be buying that stock. However, Alibaba is a little different. It's not a US company. There are other risks involved with this company, which I will discuss in this video. And because of that, I don't currently own the stock today. Even though it's down nearly 35% from its highs, it's taken a massive beatdown in recent months. I'm still holding off on this. I don't really think I'll be adding a position in here. However, I know some of you are interested in this. So I wanted to provide you kind of an unbiased view just based on the numbers, based on the fundamentals, based on the technicals of, where this stock sits at and where I think it can go over time. So first off, I see this holding a very strong level of support that it's been holding for many, many years, right? 2019, we came down, we tested this a couple of times. It dipped a little below it, but then we kind of hovered around, rallied higher, pulled back again here during March 2020 with the whole stock market really. But since then, we've gone from a low of 170, we went to a high of 320, and now we're kind of sitting in between there at around $220 per share. So definitely a volatile stock, and kind of surprising considering this is a $600 billion company. However, if you're able to stomach the volatility, that's the first step in possibly owning this stock. If I look at this more on a monthly time frame, I would like it to come down or test this moving average right here, the 50 moving average on the monthly charts. That'll probably be a very, very strong buy point. I'm not really sure if we'll get there because this is still a very strong business, which I'll show you in a second here. So it may make sense if you're looking for this over the long term to start dollar cost averaging at these prices. Typically these sort of levels where I see strong support proven over time, I would start buying if it was a business that I wanted to own. And then if we go lower, hey, I'll just buy some more and average into my position. So first off, technicals to Alibaba looking really good. Now, I mentioned the stock has never been as cheap as it is today, and that's true, guys. If you look at the price of sales, this stock has literally never been this cheap, currently sitting at a 6.56 price of sales. It's never been this cheap ever since it went public on the US exchange. It's been in the high teens, mid-teens, then we dropped under a 10. We've kind of hovered between like a 7 and 10 for a little while. Now we're getting to like the mid 6s, maybe go to the low 6s. How much lower can this really go? That remains to be seen. However, the clear trend here is that this stock just keeps getting cheaper on this metric over time. So maybe it's not the best metric to use for this kind of business. However, when we look at a few things in combination with their growth, which I'll show you in a second, price of sales like this, their charts, which we just looked at, and everything starts to point to a cheap company, a cheap valuation, it typically adds a more stronger conviction for a buy. Now keep in mind, Alibaba does a lot of e-commerce. It is an e-commerce company primarily. So a lot of the sales comes from revenues of products that they move, right? So it's kind of like an Amazon where the price of sales is typically going to be fairly low. So you have to look at other metrics like their gross margins, which are not bad for Alibaba in the 40s now, but they have been trending lower over time. You can look at other things like their revenue growth, which we'll look at again in a minute here. It's extremely strong and continue to be extremely strong. And we just look at their historical data here of, huge profits, huge revenue growth, and just overall very strong numbers. Now, I want to show you here what analysts believe this company will do this year. They believe 39% year over year, over $108 billion in revenue is what they're expecting this year. And then next year, another 30% plus growth with $141 billion in revenue. This is astronomical for a business like this. Again, this one compares to like the Facebooks, the Amazons. It even outpaces the growth that those companies are seeing. Yet we're trading, guys, 30% off of its highs. So why is that? Why is such a company that, is growing massively, strong fundamentals, strong financials, everything looks good on paper, why is it selling off? Why aren't investors flooding into this name? Well, the main reason is because this is a Chinese company, so there's a lot of political risk with this business. If you look here, there was actually risk a few weeks ago, at the end of March, that Chinese stocks like Alibaba could see them get delisted from the US exchanges. Now, you've seen this happen, kind of headlines over the years. Investors kind of just shrug that off. But we recently had, just a few months ago, some Chinese stocks actually get delisted. Like China Mobile, I believe, was one of them. And there were a few others that got delisted. They actually got removed from the US exchange. So now when, you see headlines like this, people start taking it a bit more seriously and they don't want to tie up their capital in a company that could get delisted from the American exchange. Alibaba is at risk for this. Will it actually happen? That remains to be seen. That's all speculation. But all we know so far is that, Chinese stocks in the US just don't really see eye to eye right now. Now, to add to this bad news, there was also this that came out. China fined Alibaba $2.8 billion for breaking anti-monopoly law. So not only now is Alibaba facing pressure from the US, they're also facing pressure from their local homegrown country, China, and they're charging them fines as well. We also know the recent Ant IPO that tried to go public, but then got blocked, and then Jack Ma went missing, and all that other stuff. So there's a lot of political risk when you're holding the stock, and I think for most Chinese stocks, which is why for the most part, I tend to stay away. I own one Chinese stock right now, and that is NIO, and I don't really plan to own any more, even Alibaba, even at these seemingly attractive levels. Now, this fine may seem kind of tiny, $2.8 billion for a business that's $600 billion, not too big. However, it was 4% of their total 2019 sales. But more importantly, it kind of sets the tone that everyone's against this company. If their local government, if China is against this company, you would think that they'd want to see companies like Alibaba succeed and dominate globally and not fine them and just have them, build as much cash as possible. But when you see them actually go against Alibaba, you see them fine this business, you see them, have conflicts with this business, it definitely adds a lot of fear and a lot of uncertainty with the future of how the stock can really do. It's kind of similar with like Facebook in the US or Google in the US, where they're constantly under antitrust laws or monopolistic behaviors and all that kind of stuff. And that's why those stocks don't really explode higher like Apple or Tesla or something like that, right? They move higher over time, but there's so much political stuff going on with those businesses that it just keeps the stock price relatively low compared to what it should be trading at with its metrics, and Alibaba is no different here. Now, there is some good news though with all of this, guys, okay? I'll show you what analysts think in a second, but I do want to show you here that one of the most famous investors, Charlie Munger, bought Alibaba stock as well. So Munger is a business partner, of course, with Warren Buffett, and he's pretty much tied with the Berkshire Hathaway. He's known for Berkshire Hathaway, really. And he disclosed that he owns $37 million in Alibaba stock. So this is good for 19% of his company's equity holding portfolio, and it makes the third largest position behind Bank of America and Wells Fargo. Now, this investment is done through the Daily Journal. It's not through Berkshire Hathaway, so don't get that mixed up. But Charlie Munger is known for the Daily Journal investment as well, which is why you see headlines like Charlie Munger just bought Alibaba stock. And you would think, okay, if you have a name like him behind a business like Alibaba, even with all the political risk, even with the fears of maybe they're fudging their numbers a little bit, maybe there isn't as much transparency as there should be. Hey, if Charlie Munger believes it's good, then maybe you should as well. I don't know. Maybe not. That's kind of where your own judgment comes into play. Now, let's look at what analysts have to say, because this may blow your mind a little. Analysts believe Alibaba has 43% upside. They believe it's a strong buy with almost a $320 price target here. We've had analysts come out as recent as just a couple of days ago giving price targets well into the $300 range, 338, 330, 325, 336, 50% upside, 47%, 51% upside. Analysts are bullish with this company, and with the recent dip here to like 220 or so, yeah, I'm not going to deny it. It definitely looks appealing, and it definitely looks like this one has a ton of upside ahead. But guys, what keeps me from this business is three main things. The lack of transparency with the financials, the constant regulation issues with the US and now with China, and the fact that if I own this stock, I'm not really owning the stock directly, because Alibaba, if you're not familiar, is in ADR. So if I type in BABA here, you'll see that it is an ADS, which means that it's pretty much kind of like a holding company. You're not really holding the shares directly. There's a lot of details behind that as well. That just adds a little bit more risk to this investment. But anyways, there's just too much risk involved for me to put my capital into this. There are other investments, US companies, that I believe in much more, that I can see firsthand much better, and honestly just buy some Amazon. That's kind of what I've been doing. But anyways, I wanted to provide this kind of unbiased view here on Alibaba. If you're looking purely at the fundamentals, guys, this one is a buy in my opinion. That being said, if you are considering this for a long-term investment to put a ton of capital into, weigh the political risk, weigh the other risks I've talked about in this, see if it makes sense for you to actually risk your capital in that sense. And hey, regardless of whether you choose to invest in this or not, I wish you all the best on this. And I'll just jump back to the studio here for some closing remarks. Okay guys, so that's kind of my perspective on Alibaba stock today. Like I said from the beginning, not really a company I'm planning to buy. However, just looking at their metrics today, if you're able to get over that political risk, I think this one is screaming a bargain right now. It may make sense to have some exposure here just to get some international exposure to China, who's gonna be massive over this next decade, and their growth just keeps getting stronger and stronger. But hey, if you don't feel comfortable investing in this company like with other Chinese companies, I get that as well. Either way, guys, I hope this video was informative. If you found any value, consider hitting that like button down below. It helps the channel out tremendously. But either way, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one.